All right, everybody. Today we're going to talk about why I love trading the ABCD pattern and why it's beneficial for beginning, intermediate, and even advanced traders, but more likely for beginning traders, mainly because it's an easy pattern to identify and clearly defines your risk reward ratio. And you could really focus on just this one pattern, perfect it, and refine it over time, and you can get really, really good. Now, this pattern you can trade it with multiple instruments, right? You can use stocks, you can use it for futures, foreign exchange, Bitcoin. And the beautiful thing about this particular pattern is that you can use it in multiple time frames. So whether it's 1 minute, 5 minute, 15 minute, 30, 60 minute, 1 hour, 4 hour, 1 day charts, this pattern repeats and it shows up almost every day in the market. And mainly because it's the natural flow of the market, right? And we'll talk about that. And essentially, what we have is we have all these buyers that run up a stock price or futures price or what have you. And then there's this natural pullback. And then what happens is it kind of reclaims itself, makes a higher low before kind of more buyers surge it back up to another level before it eventually continues back down. So let's take a look, for example, to some just random trades that were done yesterday on Friday. And yesterday was Friday, April 16th, right? So let's just go through some of my watch lists here. And let's just pick low float. And let's just go randomly here. And we can kind of see what this looks like. And actually, before we do that, let's just identify the ABCD pattern just a little bit clearer. So again, as I was talking about, we have this huge run up where it establishes a high day. And these are all a bunch of buyers just kind of buying up the price, bringing the price up to a section which we call A. Then there's this kind of natural exhaustion or sellers coming in and buyers essentially taking their profits and selling the stock and bringing it all the way back down to the low of the day, which we'll call B. And then, it kind of reclaims its, from its low of the day and then continues to kind of trend upwards and make this, kind of higher low, which we call C. And you really want to enter, the closer to C, the better, right? You're going to be risking off low or the low of the day. So there's your risk level, and your reward level is going to be potentially this section here, A, where you can at least take half profits, and ideally you want to make it up beyond the high of the day, where anytime a stock breaks the high of the day, it pops up on a bunch of people's scanners, and then you get a bunch of buyers surging the price all the way back up, which we'll call D. So again, let's just go back and let's take a look at a few examples. So if we go into kind of my low float scanner here, we can see right off the bat BTX, right? If we were just to zoom in on trading for that day, here we go. We have this huge run up A. We have a low of the day B. C is your higher low, and then look what happens. Not only did it break the high of the day, but it continued all the way up. Beautiful move. All right, let's take another example. Look at EBON, EBON. So here we go, a little bit cleaner chart, right? So we have this run up A throughout the day, and by the way, we're looking at a 1 minute chart. And then we have this kind of low. It's a higher low, but it's not the low of the day, right? And then reclaims that and then makes a higher low. So your entry would be right around here. So anywhere between 476, 477. And even though it didn't reach up here, you still had that bounce, and you could have taken advantage of that. Now, let's look at some large cap stocks, right? Because this actually applies, again, in different markets and different instances. Now, a little bit different chart, but if we zoom in here at the market open, we can see an ABCD pattern very clearly. A, B, higher low, C, entry. You enter at 204.90. You could take half profits at 207, all the way up to 210. And this obviously just continued all the way up. Let's look at another one, BE. Again, your high, A, B, higher low, C, 24.36, all the way up to 24.80. How about another one, CAN?